So you talked a little bit about the differences between investing in the more traditional and startup and investing in a crypto startup. The fact that anyone can do it. What are
Yeah.
the other differences?
So it's far more speculative to begin with, right?
Hmm.
So when you invest in a cryptocurrency startup, and specifically, I'm not talking about investing for equity, right? Like I've done some of those deals privately, and
Right,
it's very much the same as any other VC deal.
right,
Again, this gives regular Main Street investors the opportunity to buy the underlying asset for a brand. And ultimately, I'm a big fan of investing in brands and brand plays because kids aren't wearing certain like champion clothes have come back. They were cool in the 90s when I was a
right.
kid, and now they're cool again. That's not because they put out more clothes or spent more money on advertising or got better. It's exactly the same product. It's just that that brand is able to kind of live on and survive
Yeah,
different market cycles. So I'm a big fan of, I think, just at a macro level, just different brand strategies. Buying these underlying tokens gives you an opportunity to invest in the long-term vision of that brand and likely see a large return on the investment if that brand becomes more popular. Think about the number one cryptocurrency on earth is Bitcoin. It's the most popular brand, followed closely by Ethereum and XRP, and the list goes on. And if you think about the biggest brands in crypto, there is a direct correlation to token value. So I do believe that if you can pick the right one, there's massive upside there, but it is far more speculative. There's also no true underlying asset. So you don't have ownership in the company. So what that means is if that company were to exit, and exit is just a term we use when they basically sell all their assets, their shares, or they go public on stock exchange or what have you, you're not necessarily guaranteed any type of return. That's often the con that anti-crypto or non-coiners would tell you. They say, well, if you just have a bunch of these coins and then I buy all the equity for the company, that doesn't mean that I'm going to pay you for those coins. And while that may be true, I have yet to see a cryptocurrency company or a company with an underlying crypto asset go public or exit for a massive valuation. But I can almost guarantee that if that happened, there would be a direct correlation on token price, right? If I hold some 5 million
right.
coin that's traded on Binance, and then that coin makes an announcement that they're going public, I guarantee that's going to be good for me as a token holder. So even though you don't actually have real ownership in the company, I don't know if that matters as we look ahead 5 to 10 years. And then early liquidity is the second biggest point. So again, speculation, but early liquidity. So if I'm a traditional startup investor and I throw $100,000 into the Uber of dry cleaning in Silicon Valley, I actually never get my money back unless that company has an exit.
Right.
Whereas if that company for one reason or another chose to tokenize, and I personally wouldn't buy an underlying token for the Uber of dry cleaning, but if they chose to tokenize, then I'm going to have liquidity almost immediately in some cases, depending on when that token lists. And that's good for me as an investor. It may mean that I miss out on longer term gains, depending on how I play that investment, but it also may mean that I'm able to hedge my risk, manage it a little bit more effectively, and ultimately get more out of it as an investor. I don't have to wait 10 years. If you threw $50,000 into Uber when they were doing their angel round, it'd be worth $300 million today, which is great. Uber's a very rare case. 95% of crypto startups that are just like Uber end up failing, but they still had to wait 12 years for that exit.
Yeah.
Many other VCs were throwing 50 grand into other Ubers at the time, other up and comers, other tech products that you've never heard of. And now we're a decade later and they've still never seen the return and probably never will. So there's a different type of risk. I don't want to say it's less risky or more. It's just a different type of risk. And it's certainly intriguing enough for me to want to make some of those plays.